Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
It's after Labor Day 2025, so I figured it's a good time to start a new season, although in the last episode, I did say that we can still talk about my summer projects until at least September 20, which is officially the first day of autumn. As advertised, this is our first Q&A show of the series, and I thank everyone who wrote in and or left voicemail. I also have to thank the people who I talk to on a regular basis on the phone or through email or Zoom for reaching out. It's a great feeling to talk to other bookkeepers who are either in or want to be in my world, or the island. And that reference is meant for one specific person up in Canada. Don't stop reaching out with questions. We can always have another episode dedicated to questions very soon. Go to the website, bookkeepermensch.com, and leave voicemail there, or you can always use the fan mail feature. So let's get started with the first Q&A show of this podcast. I'm Paul Rosenblum. The first question is from Neil.
Hi, Paul. It's Neil. I had a couple of things I want to discuss. We did discuss, actually, last week about cleaning up the books. I asked if you start in June, for example, and you're trying to clean up 2025 or even 2024, do you start from the beginning of the year to start reconciling or on putting in bank transactions, or do you start from this month, for example? The other thing that was brought to my attention was one of my clients has an investment, an account, which he receives interest, and he keeps it going inside with the investment and keeps adding the interest onto the investment and keeps it as is. He doesn't pull out money from it. He doesn't put any more money in. It's a set amount. He's had this investment for a couple of years, and I'm started to do his books as of June. So how do I account for that? Am I just going to put in a journal entry and use it the same way I do with the bank account? Or do I set it up a little differently?
Thanks for the question, Neil. If you are just starting with QuickBooks Online or desktop, for that matter, with no other data in it, then I would start at the beginning of 2025 or December 16 in your case, since the statement ends on January 15. Enter the beginning balance of the statement and the ending balance of the statement that starts in December and ends in January 2025 and reconcile as usual. If there is 2024 data in QuickBooks already and the balance isn't correct, then I'd correct the balance as of January when the statement ends and put whatever the reconciliation difference is in prior year adjustments in the equity section of the balance sheet. 2024 isn't your responsibility if you were hired to start working on the books as of January 1st. My general instinct personally is to go back a few years and fix everything. But in reality, if someone makes it clear to you that they want you to start with 2025 and leave prior years alone, then that's the thing you should do after explaining to them what you are doing in a non-technical way. Neil has a second part of the question as well. Any account that has a statement should be reconciled to the statement in QuickBooks or whatever accounting system that you're using every month. So a loan, a credit line, or an investment that all come with monthly or quarterly statements should be reconciled, even if the only transaction is interest earned. Many tax preparers just look at the annual statement and add the interest earned to the tax return, but won't add it to the books. That's our job to do. Just confirming, though, the investment account, if it's in the company's name, should be recorded in the books. If it's in the owner's name, then all of that is personal and should not really be entered in the books. Very good questions, Neil. Thank you so much. Sticking with the theme of bookkeeper questions, here's one from Jenny, who wants to know.
Hi, Paul. This is Jenny. My question is, what would your advice be for a new bookkeeper who has not gone through a tax season before to make it as easy as possible as we're approaching this pre-tax season? What are a few things that can be done ahead of time to make things easier, or just one solid, don't do this piece of advice? Thank you.
Thanks, Jenny. Yes, pre-tax season. My characterization of it. In September, I run 1099 reports for all of my clients and email them. Even though it's early, I just want to make sure that we have up-to-date W-9 forms for everyone and that no one is being left out who should be getting a 1099. This also includes a report of subcontracted labor right from the profit and loss to make sure that they are all there. And if nothing changes between now and January, it looks like that the threshold of it is going up from $600 to $2,000 for 1099s that we have to produce, if not from Venmo or PayPal. If someone is being paid by check or Zelle and over $2,000 for the year, then we have to produce 1099s. So this is something that we should start checking and double-checking starting right now. Also, Jenny, I'd make sure that you clean up all the miscellaneous transactions that are in Ask My Client, or whatever you name it. Don't wait until the last minute to do that. Clean those up now, and then every month until the end of the year, make sure that you keep up with them. So at the beginning of next year, every transaction is categorized in the system correctly. So the simple answer is to start doing year-end work now in September so you are ahead of tax season. I call it ramping it up. After a quiet July and much of August, I'm starting to ramp it up myself, working a little faster, a little harder, being very organized and very efficient. The adrenaline isn't necessarily flowing yet, but it's getting ready to. Pre-adrenaline season. Then in October, one more step in the ramp-up. Then by November, I consider it tax season, and I am on full steam. On another note, if you haven't already, start building relationships with every tax preparer for every client who you work with. Call them, ask any questions that you might have, and let them know, most importantly, that you are accepting new clients. If they know that you are expanding, you will probably get referrals during tax season, or in many cases, even before. The first tax season for new bookkeepers is one of the most important. This is the season that you are planting seeds for clients and tax preparers alike to showcase yourself, and the seeds will grow into a thriving business. Also, I'd have a short-term plan and a long-term plan on how much money you're going to charge a client, and if it's a monthly retainer style billing or per hour like I do. Remember, there are more businesses who need bookkeepers than bookkeepers available these days, and not people who claim they are bookkeepers just because they're, quote, good with numbers, unquote. Also, make sure that all of the accountants have your business card, even if you have to put some in an envelope and send them snail mail. Networking is good as well. Meeting potential clients who might be looking for bookkeepers, or maybe businesses who they might know who might be looking for a bookkeeper. I'm sure I left some things out, but I hope that helps, Jenny. Thanks so much for your question.
We'll be back after a quick break.
We have a new feature starting today, the tax tip for the week. Here's the very first one. If you are an LLC, single or partnership, you are taxed on a personal level with personal rates and pay the entire 15.3% self-employment tax. However, whatever the net profit is, you will calculate the tax deducting 20% of that net profit of the business. If, however, you are an S-Corp, you are still taxed as a pass-through, personal tax structure, but without the 20% deduction of the net profit. The S-Corp pays half of the 15.3% self-employment tax through payroll, and you, the owner, will pay the other half. The C Corporation is taxed at a straight 21% tax. It's worth having this conversation with your tax preparer to see if the structure would be best for you. The next question is from Evan. This is a bookkeeping question, easy to ask, hard to answer. Go for it, Evan.
Hey, Paul, this is Evan from Twin Falls, Idaho, and I'm wondering, how do you handle Affirm in the business books? Thanks a million.
For those of you who might not know what Affirm is, it's a way of making purchases with some vendors by taking out a very short-term loan or funding just for that one purchase. Their terms are usually between 3 and 6 months to pay off. They have preset interest and preset payments which are due on a particular day of the month. They send reminders to your phone and texts and emails a few days before the payment is due. They also do offer credit cards, but what I'm talking about here is a short-term loan, not a credit card. Let me answer this in 2 ways. Let's say one makes a purchase for supplies for $1,000 for their business and they use Affirm. In QuickBooks, at least, you cannot use a regular expense function to create this transaction. You would have to create a new payable account, which would be a current liability. A journal entry would do it. Debit a supplies expense, credit the payable liability account. As each payment is made, the expense would be subtracting money from the bank account or the credit card account, and the payable would be debited by the expense transaction. When the payable becomes zero, the supplies are paid for. If, however, there is another Affirm funding for another purchase before the original is paid off, I usually make another payable for the new purchase. This way, you can track each of them much better. However, there are 2 potential situations. The first is that the Affirm original transaction has some supplies and a purchase that is considered an asset of the business. Then you would have to split the transaction into supplies and the fixed asset section. The payments would be dealt with in the same way. Once the asset is paid off, you'd either have to create an accumulated depreciation account for the asset or Section 179 as an other expense on the profit and loss statement after asking the tax preparer what they would like to do. The other situation is that the client either has to give you the original receipt or email it so that you know exactly what was purchased and what the interest was, so that the interest can be properly booked into the system. It all comes down to what I've talked about forever here: relationships. Having a relationship with the client so that you can get this information easily from them. Clients don't care about and don't want to know about these details, at least most of the time. So as a bookkeeper, you just have to ask for the information from them and hope that you get it. There are no real statements from a firm like a credit card or a bank statement, so bookkeepers are at the mercy of the client to get the correct information from them. I have found that once a business owner discovers a firm, they tend to use it again and again. Multiple purchases, multiple payments, multiple payment plans, and lots of moving parts. It's very hard to track under the best of circumstances because of the mixed assets and expenses purchased at the same time with the same short-term funding. Great timely question, Evan. Thank you. The last question is something that comes up often with clients and tax preparers who I work with, and that is, what is the difference between a car lease and a car being financed for purchase in 24 or 36 months? Leased vehicles are an expense. Financed vehicles have to be entered as payables and a fixed asset that will eventually get depreciated, similar to an Affirm payment for something that's purchased as an asset for the company. The preceding is true if it's a company vehicle. If there's a personal vehicle that's being paid for by the LLC and the owner is claiming that it's used 100% for business, then that might be an audit waiting to happen. The trip from home to the office and from the office back home is not deductible. Hence, that ends the 100% deduction right there. The percentage that you claim the use of the personal vehicle is for work-related travel only, and that would include that percentage of gas, parking, tolls, repairs, maintenance, and car insurance. Mileage logs and receipts have to be kept. I would be remiss, even in this episode, if I didn't rant just a bit about a client who wasn't in the office in July and for 2 weeks in August. Before they left, however, I sent all the questions that I had through June so that I could clean up their books in their absence. I heard from them next in the middle of August. They answered about 5 spreadsheets of different accounts that I sent them, paid 2 invoices from May, and then sent me an email requesting a profit and loss and balance sheet ASAP so that they can send to their bank. I went through and reclassified all the questions that I had for them, and then I started looking at many loans that they had from the rapid advance funders. I ran a balance sheet, highlighted all of them, and asked the finance person what the correct balances were as of June 30. Some were paid off but showed incorrect balances in the books. This happens when the client does not give the bookkeeper full access to their bank accounts. They only send the bank statements and invoices from the loans without payment plans or balances. As part of this exercise, I wanted to make sure that these balances were correct as of 12/31/24, since they were on extension and their CPA would soon need to file 2024. The balances ended up being incorrect as well. So it took a lot of time for the client to come up with the statements from the loan companies, more time to make these correcting entries, all when I should have been working on other things. Moving forward, I have given the client a list of reports, statements, and information that I need from them every single month, and we'll see how that works out. By the way, this process started on a Monday, and the CPA and I released the reports to the bank on that Friday at 2 p.m. So, to keep the theme of this episode, let me ask a question. Why did I stop everything else that I'm working on to get this done? The answer is that I don't have the faintest clue. I guess I'm the first patient for the Bookkeepers Therapy course. Please listen to the last episode. Keep those questions coming, and happy September 2025. I'm Paul Rosenblum.